Hi everyone, this is Stephen Adams and welcome back to this Wealthy Education Advanced Technical Analysis course. Today we're going to be talking about how to trade parallel channels. This is our third video in our module on support and resistance indicators. So let's jump right into trading parallel channels. Parallel channels are very similar to our horizontal support and resistance from our last video. The major difference in a parallel channel is that the stock is either in an uptrend or a downtrend in order for this indicator to work. The channel can be used to indicate exit and entry points in a stock, which currently has no horizontal support or resistance. So if we have a stock that's either broken out to the upside and we don't have current resistance levels for that stock, we can use a parallel channel to help us with our entry and exit points. Or if we have a stock that's broken down to the downside and we don't have any major support levels that we can look to, then we can use a parallel channel to help generate support levels for the stock. A breakout from a channel is similar to a break in horizontal support or resistance. So if a stock is trading in a parallel channel and then breaks that channel either to the upside or the downside, we can treat this as a break of support or resistance. And when that happens, what we want to do is trade in the direction of the break. So if you're in an uptrend and the stock is trading in a parallel channel and then breaks that channel to the downside, we're going to treat that as a break of support. And we would either exit long positions and or go short the stock at that point, depending on other indicators. We want to use parallel channels in combination with other technical indicators. And we can also use it in our multiple time frame analysis. So let's take a look at parallel channels on a chart and see how we use support and resistance in a parallel channel. Let's use a chart of Ford in TradingView to see how we might draw a parallel channel and how we could possibly trade using a parallel channel. So here I brought up a chart of Ford, and I'm going to go over to the left-hand side, click at the top on the trend lines, and go down to parallel channel here toward the bottom. Click parallel channel. I'm going to look at my chart and see that the stock was in a downtrend and then a double bottom was put in. And now the stock appears to be in an uptrend, making higher highs and higher lows. So I'm going to click my mouse here to draw the bottom line of my parallel channel. And I'll click a second time to place the right-hand side of the channel. And now without clicking anything, I can move my mouse up, and that will give me the resistance line for my channel. So I click that and it locks it in place. Now I'm going to move the chart forward so we can see where we would have purchased the stock as we used our channel to trade. I'll move the channel forward, keeping that same bottom support line that we originally drew, and lock that in place. And we'll see as we were looking for an entry point, we wouldn't enter as the stock was in the upper part of the channel, but when it pulled back here to around $11, that's the bottom of our channel, and that's where we would have entered the stock and gotten long there. The stock continues to move up in the channel, so everything's fine. And I'm going to move the chart forward a little bit. And we'll continue to draw our channel, keeping our same support line in place. And what we would have seen in the stock was the stock broke through our channel to the downside at around the 1160 level. And when the stock clearly broke the channel, we would have either exited our long position or gotten short at this point. And as we can see, the stock continued down to under $10. So that's how we use the parallel channel as support and resistance, and how we draw it on a chart. As you'll see also, the MACD, which we would have been using in combination with our parallel channel, it broke down as well when the stock started to move down here, and it went to a sell signal at this point as well. Let's continue using this chart and see how it would impact our trading if we were trading on an hourly basis. So I'm going to go up here in the upper left and change our time frame to an hourly basis. I'm going to pull back to our channel that we drew on a daily time frame. and look at how we may have traded the chart hourly. We had our daily channel in place, and now I'm going to draw a second channel, which is our hourly channel. Here, if we had these points in place, I'm going to click that, move this up, and this would have been our hourly channel. As the stock broke above our hourly channel, here it became a buy. So if the stock is trading in the lower range of our daily channel, but our hourly channel lets us zoom in on a shorter time frame, we may be able to see a break in our hourly channel that we wouldn't have seen in our daily channel. And we could use this as a buy signal on an hourly basis. And we could do the same thing if we drop down to a 30-minute channel. You can draw multiple channels within other channels and use those to trade multiple time frames. And you always want to keep an eye on your larger time frame to make sure the trend is in place. So that's how we can use multiple time frames with parallel channels. Thank you for watching this video on parallel channels. In our next video, we'll be talking about Fibonacci lines and Fibonacci extensions. I look forward to seeing you in the next video. Thank you.